good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Avant Bash. And for the trading session today, it's been a bit of a roller coaster ride. And I say that because in the last half an hour or so, we did see quite a bit of slide in the markets. Yes, we're holding above the mark of 18,500, but considerably off the highest point of the trading session. The Nifty Bank has actually managed to buck the trend today. So we are seeing a bit of a green there, a bit of an outperformance as compared to the rest of the market. So that's one space that we are watching out for. Separately, we're also watching out for what's happening with respect to other sectors as well. Case in point being the mid-cap index and the small-cap index itself, which is seeing quite a bit of recovery. So the broader market action is definitely positive and the momentum continues to be quite strong. Nifty Bank was close to the highest point of the trading session the last time we checked, but that has completely reversed. So the statement doesn't hold true at this point of time. But what holds true is the fact that real estate and PSU banking names have seen quite a bit of bounce back this week. PSU banking names were quite a bit of laggard in the last week. This week we have seen bit of a recovery, and the real estate pack is also seeing quite a bit of traction. What also is doing well today is Zomato and Nykaa. So a couple of these new age tech stocks are doing quite well with a gain of around 5 to 10%. On the other hand, the gas stocks are under pressure. So Indiabulls Gas is down. Apparently, the volumes haven't been that impressive for the company. You also have Gujarat Gas that continues to reel under pressure after we had seen that Saudi Aramco cut the propane prices, which becomes more competition for Gujarat Gas, and Adani Gas too is on the back foot. Globally as well, it's a bit of a mixed scene at this point of time. Hang Seng saw a solid rally of 4% today. Remember, there are news flow coming in that China is discussing and mulling probably some sort of package to boost the property sector, and that should be good news coming in for the metal. So let's see if there's a reaction on the Nifty Metal Index. Individual counter, maybe Tata Steel, Jindal Steel, Hindalco. We should watch out for all of those counters. As of now, we're not seeing a big reaction, but nonetheless, that space needs to be watched. But it's Friday, and overall looks like it'll be fine if we end in the green today.
Absolutely, it will. And the market momentum, as you said, for now is looking okay. But there's lots of stocks actually, Anisha, that are in news. So let's run our viewers through them. You've got Biocon that's in the spotlight, and it is certainly coming under quite a bit of pressure in trade. A lot of the global peers now are ramping up their plans. This is to launch that top-selling anti-inflammatory drug, Humira biosimilar, at lower prices as well. And we understand that nearly 8 players plan to enter the market in July. And Biocon had planned the launch of this product on the 1st of July in the United States. So clearly, that stock is reeling under pressure on the back of that. It's auto sales numbers across the board, and just penciling in for majority of the fact that you have seen a fairly healthy set of numbers coming in, the likes of Escorts, Bajaj Auto, M&M Auto as well. The tractor sales though for M&M have been a bit of a disappointment. Eicher VCV ditto, and it's been in line for Ashok Leyland. So a lot of those auto majors digesting the May auto sales scorecard. Other than that, you've got HEG and Graphite both buzzing away in today's trading session, largely on the back of the analyst meet takeaways. In fact, let me take it across then to my colleague Ashesha, who joins in with all the updates from that conference call for HEG. Ashesha?
Well, yes, graphite electrode manufacturers, the likes of HEG and Graphite India, are up and away in trade today. HEG, in fact, met with a couple of analysts yesterday, and some important takeaways are emerging from that particular meet. Although they acknowledge the fact that in the near term there could be headwinds in the sector, they are pretty bullish on the long-term outlook of the entire graphite industry. They say that in the near term, margins could expand, and that is because needle coke prices are expected to fall from here on. On margins, they say that they are expecting operating margins to be at that 25% mark in the medium to longer term. As far as their outlook is concerned, they are pretty bullish on the long-term outlook and the long-term story. They say that decarbonization trend across the globe is aiding the demand for the sector. Although in the near term, demand could be weak, but they expect demand to come up from the second half of FY24. Talking about regional demand then, they expect China demand to be very strong. And as far as US sales are concerned, they expect to focus more on the US market. Remember, they've already focused a lot. US sales have risen anywhere between 2.5 to 3 times in the last 2 to 3 years, and they expect they continue to focus on this particular market. As far as companies' capex plans are concerned, they say that no other company has focused on capex the way this company has, and they intend to increase their capacity from 80,000 to 1 lakh tons in the next couple of weeks alone. So strong capex plans, long-term story of the industry looks intact, and that is the reason the stocks are buzzing in trade today.
Putting that into perspective, so HEG is sitting very close to the record high levels as well, and even Graphite India doing quite well in the trading sessions. That's the key takeaway. But let's welcome on board our guests as well. We have Rahul Shah to talk to us about the fundamentals of the market, and as usual, Kunal Bothra as well as Naresh Mirani joining us on the technicals. Kunal, let me first come to you because that's quite a bit of slide that we are seeing, and we should pull up the candlestick chart, and that will tell you that whether we are seeing a lot of red bars or not. But what's your sense, Kunal, of where we are headed?
So, good afternoon, Nisha. My sense is that we are still heading on to the upward side for the index, specifically for the benchmark Nifty. Now, what we are seeing over the last couple of days is a definite amount of churn, which has happened from one sector to the others. For example, there is a definite amount of trend that the banking index, and especially the private sector banking names, are the ones which are seeing some sort of selling or profit booking, call what you may want to. But on the other hand, there are other sectors which are garnering a lot of attention from the markets. For example, we were discussing extensively in the morning about the pharma stocks. Most of the pharma names, especially the large cap names like Sun Pharma, Dr. Reddy, etc. These stocks are coming back to their 2-week, 3-week, or in some cases a multi-month high for themselves. So I would probably sense that this is a phase of the markets where the action is shifting towards stock-specific or rather sector-specific churns rather than the indices. We are still into a trading range on the upside, bias on the upside for the index. Until the time we trade above the 18,400 mark on the Nifty, I think it always makes sense to hold on to the index long positions, but not to add them because of the lack of momentum on the indices.
All right, let's also find out what Naresh's outlook is then. And Naresh, getting a sense as to how exactly you're building in positions at a time when we are looking at the index hovering around the 18,500 mark. The fact that a lot of those rate sensitives as well seem to be moving in tandem with the index. What's your outlook in terms of levels?
So if you look at it, the index has been sluggish purely for the fact that the heavyweights. So today we've not seen any follow-up buying in HDFC Bank or a Reliance Industries. We are seeing a little bit of a downtick in Infosys, TCS. So if say this comprises roughly around 35 to 40% of the index, and if there is no momentum here, it's tough for the benchmark indices to make a sharp move. The trends are clear. We are seeing stock-specific movements. So we are looking at, say, Motocorp breaking out multi-month highs, making a 3% move. Apollo Hospitals, which was lagging behind, making a 3-4% move. So the case is very simple. The trend is up. The momentum is not great purely because of the heavyweights not doing anything. But overall, the mid-cap indices continue to be in positive today. The small cap indices in positive. The mid cap indices have hit a new all-time high today as well. So the trend is still up, but the momentum is not great in the indices purely because the heavyweights are not doing it. And if we start seeing some bit of a reversal signal in any of the heavyweights, so we'll expect a bigger move, quicker move towards 18,800, 900.
Before I come to Rahul, I just have a follow-up for Kunal as well. Kunal, we saw that Zomato was consolidating for the longest time, and then it went into a consistent uptrend. It's doing well today as well, just around that 70 mark, though off the highest point of the trading session. Do you think that time has come for Nykaa now that the consolidation is over? Because today it's moving on heavy volumes. The stock is up around 7%. Would you be a buyer in Nykaa now?
Well, absolutely, yes, Anisha. And I think it's a very good move for Nykaa because it's not just about the 7% up move for the stock. You look at the volumes today for the stock, I think it's at a multi-day high volume so far for Nykaa. If I'm not wrong, I think we can compare this volume to the start of the month of May for the stock when it moved up almost 10% or 15% in a matter of single trading session. And the second, the most important part is that the stock is now able to surpass the previous 2.5 odd month swing high. When you see such kind of price volume breakouts, it generally gives a sense that the trends have reversed for the stock price, and the kind of selling or the sell-on rallies kind of a trend, those have changed for Nykaa. So this could be a refreshing change for the stock price. And I would believe that the stock should see a follow-through up move. So like what we've been discussing earlier, the likes of PB Fintech, Paytm, etc., where there has been more consistent buying, I believe that there should be more follow-up buying for Nykaa after such a kind of a strong candlestick up move.
Rahul Shah as well is with us on the show. Hi Rahul, good afternoon. What's your assessment of the market mood at the current juncture, given the fact that, you've got some of those IT stocks that are bucking the trend, you've got a lot of those new age tech companies that are managing to fly high. What's the outlook given that we're holding out around the 18,500 mark? Do you think that we will see the broader markets this time take leadership?
Hi, good afternoon. I think where the markets have been, I think it's been very good at what I perceive out of it. I think Q4 earnings has been robust and blockbuster, I should say. I think it's better than what we were expecting. And last 4 quarters of earnings, what we see in this quarter, I think it has been a very robust quarter for most of the companies, what they reported their numbers. And I think this is what we are seeing, the follow-up buying coming into the markets, and which is reflecting. So to start with it, I think, as you mentioned, I think a few IT companies are doing very well, and a mixed bag for some other. And so what I perceive is, I think the broader market looks quite interesting. Now the follow-up should move to the broader markets, which was polarized to a few large caps. So I think we've been seeing in that mid-cap index hitting highs. So I think it should be an all-round participation, what it looks like as of now. Maybe earlier it was only sector specific, which we saw that banking taking the lead and then followed up by the other sectors. So I feel that market should get into back with the broader perspective rather than only on a few stocks.
Let me get stock specific a bit. Aman was just highlighting the IT stocks, and interestingly, it's Scient, which is up a good 7-8% yet again today. The stock has seen a great rally of late. You also have KPIT Tech, which is sitting at all-time high level. Persistent, of course, is up, 60-70% this year itself. Do you think this big divergence that we are seeing in large cap IT versus mid cap IT is likely to stay? And can it really continue for mid caps? Would you be still a buyer on the mid cap IT?
I think what we have seen is in the technology had a mixed numbers. I think few large cap reported the below estimates, and the mid caps performed very well. So I perceive that I think the numbers should what we've seen in the mid cap stocks in the IT run up, I think it should follow up in the large cap at this juncture. So my sense is that I think large cap should take it over from here in the IT space.
So that's the take coming in. Since we're talking about Scient, let me just get a technical view as well. Naresh, on Scient, look at this rally to book profits or maybe further add on to your positions?
So definitely not an add-on to the position. One can be looking at either trailing with a stop loss below 1300 or looking to book profits. The stock has made a solid move, one of the few names which is making new all-time highs. It just made a fresh all-time high about 1300, which was the high in 2021. So out here, one strategy is simply put, reduce partial profits at current levels or keep a stop loss at 1300 until the time it continues to make higher tops and higher bottoms, right onto it. So overall, cannot be bought fresh here because the risk rewards are not great.
Okay, meantime, Rahul, wanted to get in your take as to what the outlook is when it comes to Biocon. Clearly, the stock continues to remain nervous ahead of the fact that you've got some of those global peers who are ramping up their plans to launch that anti-inflammatory drug at lower prices. Do you believe that the reaction that we're seeing is justified, and how much of a concern is this for Biocon?
I think what we've seen is whenever there's a new launch or something, you would see some kind of reaction immediate on the stock. So I think that's what has happened in Biocon. So I don't see anything immediate major which is going to happen in this thing. So I think stock is fairly valued at this price and has done nothing in last 2 years if you look at it. So I think everything is priced in at this price. I don't see any major correction in the stock.
Correction on Biocon, most of the positives and negatives have played out, but let's look at some of the price volume buzzers as well if we can. Mahanagar Gas is one stock that continues a bit of a slide. It snapped the 8-session gaining streak.
Hello.
Rahul, yes, we'll come to you. Let me just highlight some of the volume buzzers in the meantime. The breakdown from upward sloping support is something that we are watching out for when it comes to Mahanagar Gas. Separately, Apollo Hospitals is one stock which has been doing really well this week. In fact, it's hit a fresh 52-week high today. It's seeing a breakout from the cup and handle chart pattern, and the volumes continue to be on the higher side. You also have Scient, which has managed to hit an all-time high on an intraday basis, formed higher highs and higher lows for third session. I'm not sure if we can go to Rahul on Apollo Hospital because we've already got view from Naresh. He still remains a bit of a buyer on Apollo Hospital, if I remember it right. Kunal, Naresh, either of you, do you have a view on Apollo Hospitals that you want to suggest? Naresh, yes, you have to unmute.
Yeah, I've been positive on Apollo Hospitals. Today is a breakout move. The stock has made a new 52-week high and still has a lot to catch up with the rest of the hospital names. So if you pick up any of the hospital names, whether it is a Narayan Udale or a Healthcare Global or other recently listed names also, they've all gone into 52-week highs, all-time highs, and have made another 20% move from that points also. So that is where there is a lot of catch-up left with Apollo Hospital. So I expect a slow and steady move towards 5,500 to 6,000 here. And now one can keep a revised stop loss at 4,700.
Okay, so 5,500 on Apollo Hospitals. That's what the chart check is telling Naresh at this point of time. Quite a bit of up move left. In fact, since we're talking about the pharma space, let's also highlight Mankind Pharma. After the IPO, that stock had seen a bit of a drubbing, but now today it's up around 5%. And then you have a lot of cement names which are doing well. Nuvoco Vista is up around 5%. Star Cement is higher by 5%. India Cements as well at the start of the trading session at least was doing quite well. Kunal, what's your take on these cement names? Would you look at the charts of any of that positively?
I think except for Ambuja Cements, there is hardly any major chart which is actually showing any kind of a positive in momentum. For whether it's the large caps or the mid cap names. So I was actually looking at the charts for India Cement in the morning. The stock opened with a mild bit of a gap up, but then that got sold into quite easily. Ultratech Cement has been struggling to break past consistently above the 8,000, 8,200 band. The stock has seen a lot of volatility. Ambuja Cement is the only stock which I think has been a lot more consistent, even after the sharp selling the stock had seen in the month of January. So that's the only chart which, as of now, looks attractive. Most of the other names, Ramco Cement, for example, that stock has run up exceedingly, thick and fast. And I think entering now at current levels would be a bit of a low risk reward trade, because to try and look out for maybe a 5 to 10% swing upside for the stock, the potential downside could also be more than 5 to 10%. So I think it also makes sense to stick with just few names over here. Ambuja Cement is the only stock which looks attractive, so we'll stick to that.
Okay, a buy on Ambuja Cement. All right, time to slip into a quick break, and as we do that, let's hear it out then from Vikash Kumar Jain of CLSA. He says that in a bull case scenario, he sees the Nifty hitting the 21,000 mark. Let's listen in to his thesis.
We are now 3 to 6% below consensus on Nifty EPS. Now, if I were to use, we have this favored valuation benchmark where we try and compare equity valuations to bond valuations. We favor that much more than the absolute PE, which is a popular benchmark when looking at equity valuations. And if I were to, that is right now, somewhere between average and stretched. That is where it is in terms of difference between bond yield and earnings yield. If I were to assume that, what is the bull case in this situation? That is, if I were to use the bull case or stretch it out with assuming that yields stay at about 7% or so, and you use CLSA estimates, then in the bull case, we have about a 10% rally or so, maybe somewhere between 2,500 to 21,000 is what comes out as the bull case at the end of this calendar year.
Well, Nifty is just holding around that 18,500 mark, but as we pointed out at the start of this show itself, that the metal is the space to watch out for. China is mulling a support package to help the property sector there, and that should augur well for the entire metal space, entire commodities basket, given the fact that this would mean that there will be more demand coming in for all the commodity as well as metals, and that's the reason the Nifty Metal is sitting at the highest point of the trading session, 1.25% higher. Let's pull up some of the individual names as well and see which are the stocks which are actually reacting positively, whether it's some of the steel stocks, the likes of Tata Steel, whether it's Hindalco, whether it's Nalco, which are the stocks which are carrying the maximum momentum on the upside, and that will tell you that what's happening in the entire metal basket at this point of time. Rahul, what's your thesis around the entire metal cycle? It's very difficult to call the tops and the bottoms on this one. As an investor, what would be your recommendation?
I think if you look at the numbers of Q4, I think most of the metal companies declined, and most of their numbers were below estimate year on year and as well as quarter on quarter. But what it looks like is, I think, way the government spend is there on the infra front. I feel that I think should be done, and I think all the metal companies, especially steel, should come back positively. That is what I believe. So I think steel stocks should gather the momentum. I think they have been beaten down more. I think, as I rightly pointed out in terms of this thing, and I think the things demand keeps coming up and infra spends keeps coming up. And what we are seeing is the blockbuster numbers from the real estate side and then the thrust of spending on infra play. I feel that steel companies should do well. So I think obviously likes of Tata Steel and JSW Steel should bottom out. And I think their stock has done nothing in last 1 year if you look at it. So I think looks interesting from the current perspective.
Pretty much across the board today, as we're flagging off, Hindalco 3.5%, Jindal Steel 3% on that counter, JSW Steel as well having spiked up along with Moil and MDC. They're all abuzz. In fact, let's get in a take on the charts then, Kunal. What's looking good within the metals basket, and do you believe that this rally is looking long-term in nature?
Well, as of now, of course, it's not looking long-term, Avan, but at least this rally probably puts in place a short-term bottom for most of the stocks. You look at the last 2 weeks of chart patterns, and there's so much of volatility which has come back into the metal counters, whether it's JSPL, a stock which has corrected, I think, more than 15% in the last 1 or 2 weeks. Hindalco has gone through a correction. Vedanta has been on and off in terms of the price trends. JSW Steel, I remember, I think the stock from 740-45 levels had corrected to a 680-685, and now it's in a bounce back about that 700 mark. So that choppiness, at least, that should be put aside for the metal counters after this kind of a rally. So what we're seeing now is more of a base building process for these stocks. They will gradually go into a zone where the news flow, the data points, etc., will start to come out positive, and the trends would be far more stable and stronger for these metal names. Now, out of the pack, the two stocks which I would be keenly watching out for, and especially looking to go for a buy, one would be JSW Steel. I strongly believe that the stock could probably come back towards that 740, 750 mark once this rally recovery goes into the second stage for itself. And JSPL could be more of a high beta bet. So we'll be using some sort of options as an instrument. I think traders could look at a buy on JSPL as well.
Thanks, Kunal. Those are the topics coming in from the metal space. But watch out for Tech Mahindra. It seems Citi has actually opened a 90-day negative catalyst watch on Tech Mahindra. The stock is seeing a bit of a slide, not by a whole lot. It's just around the flat line, but need to watch out for that. Citi believes that the stock has outperformed quite a bit as compared to the NSE-IT. The expectations from Q1 are poised that there might be a bit of disappointment. The Comviva seasonality might impact the Q1 numbers. And the levers that Street is banking on with respect to margin improvement might take time to play out. So that's why for Citi, they have maintained a sell call with a target price of 920 as far as Tech Mahindra goes. They also believe that the risk reward looks unfavorable given the fact that the near-term valuations are at around 18x the 1-year forward consensus. That leaves little room for disappointment on the company, and that's why they believe that most of the positive seems to be priced in at this point of time. In fact, since we're talking about Tech Mahindra, let me toss it to my colleague Aishwarya. She was in conversation with Mr. C.P. Gurnani from the sidelines of the India Economic Conclave. Let's listen in to what he's making of the demand momentum on the ground.
My belief is the recovery in 2024 is 100%. And you might start seeing a bit of a recovery in the areas where there is a slowdown by end of 2023. So overall, right now it is India's year. So let's celebrate India's year.
In the last 6 months for Tech Mahindra, how have the client conversions been? And any particular months you would like to highlight? Was April better in terms of business?
I mean, some days, months are better, but overall I would say we are also adjusting to the relatively high growth years, and calendar year 23 will be moderate growth. So it doesn't matter which month I do better, because it's not that we deal with governments and financial year ends in March, so we will do better in financial year ending. I think from my perspective, it is all about the whole year and being able to recalibrate to the newer technologies and getting the organization ready to embrace newer technologies. We did well in Metaverse, we did well in Web 3.0, we did well in 5G. Now we will do even better in artificial intelligence.
Speaking of, I was just getting to artificial intelligence. The power of Indian IT companies is the strength of the employees, the IT talent that we have. Do you think AI will disrupt that and sort of take away the talent pool that is there right now?
I think AI will expand the market. It's the same way the mobile phone that you're carrying expanded the telecom market. You went to the airports, you saw the check-in formalities are now being done at your house. It has only expanded the market. The service offerings only increase. So I think there will be more service offerings, the market will expand, and as the left brain and the right brain start working together, as the hybrid working between AI and human intelligence works better, you will only see the consumption of technology will increase.
All right, there you have it. That is CP Gurnani in conversation with my colleague Aishwarya. Tech Mahindra continues to buck the general trend, quite muted in trade. But let's focus in on M&M as well, as they have unveiled their latest Swaraj target. Let's hear it out then from the management, who is Hemant Sikka of M&M, speaking to ET now.
Today we have launched a new product in the lightweight series under the Swaraj brand called Swaraj Target. This product we are launching in 2 HP segments, 29 HP and 25 HP. And the good thing about this launch is that this is a totally white space for us in Swaraj. Currently we don't have any product in this segment, so this is a white space which obviously puts us to gain more volume, more market share, and gives us growth. This segment of lightweight tractors is currently about 50,000 to 60,000 tractors per year, and we believe that with our launch of Target here, we should be able to get some good market share gain. So all of this is part of our overall strategy to improve our market share in the tractor industry.
A road trip.
Thanks for staying with us. This is Closing Trades. We've got Mahantesh Sabarad as well joining in on the show. And Mahantesh, wanted to get in your take on the auto sector. Given the fact that majority of the numbers this time around have been fairly decent, attributed to the wedding season, the pickup in overall demand, etc., what has been your key takeaway from auto sales?
I think the key takeaway has been that the two-wheeler sales have done a lot better relative to the other subsegments of the automobile sector. That's partly because they have had a typically very low base to grow upon. That said, there is also these new developments that are happening with respect to the electric two-wheeler incentives and so on and so forth that could have pushed certain pre-sales into the market. But then the overall economic recovery has been strong enough to drive overall automobile sales. Two-wheelers have particularly done well, as I have mentioned, because of the low base effect. So this is the key takeaway of the automobile sales. But I'm getting a little worried about the future prospects, because we will have probably a monsoon which could run into deficiency kind of territory and could be a dampener ahead.
How the monsoon really pans out, but we were earlier highlighting some of the cement names. What's actually joined the party is JK Lakshmi Cement as well. That stock is up around 8%, apart from the likes of Nuvoco, Vistas, etc., which were doing quite well in the trading session earlier as well. On the losing side, it's VRL Logistics which is seeing a sharp crack, and not just that, even Aegis Logistics is on the back foot. So maybe some amount of pressure coming in on the entire logistics space as well. Rainbow Children's is the other counter which has been on a slide for a while now. In fact, let's pull up the 5-day chart if we can of Rainbow Children's Hospital, because that stock has seen a bit of a slide. Okay, so on a 7-day basis, it's still in the green, but over the last 2 to 3 sessions, we have seen a bit of a downtick on that one. IIFL Finance wanted to highlight that one. A gain of 6%. Remember, my colleague Ajay had done a story last week that IIFL is likely to launch a neobank for MSMEs soon. It was expected to happen anytime this week. Let's see when that pans out. But for now, IIFL Finance is holding up comfortably in the green. It was set to launch India's first neobank for MSMEs soon. So we are waiting to know whether that clarification and confirmation has come or not. But Mahantesh, just talking about the cement counter, and you were just talking about how monsoon can play a spoilsport for auto companies. Could it be a similar case for cement stocks? Because for now, they're not factoring that. They're seeing quite a bit of up move.
See, cement is slightly different simply because there is also a government activity to be considered when cement demand is to be forecast, and that government activity has been pretty strong. In fact, the budget gave us an indication that the capex spends of the government could potentially be higher this time around. And as corporate recovery happens, we will also see corporate spending helping the cement demand. So it's not just housing demand alone, which is linked, which is what you alluded to in terms of your question indirectly by talking about monsoon affecting potentially housing demand. Yes, it could if the monsoons are deficient, but then the overall corporate level activity and the overall government activity could potentially offset the demand, problems. On the other hand, on the cost side, there is a definite slide in the overall cost structure for most cement companies. Commodities, global commodity prices are actually falling off the cliff, and that tends to be better for cement companies. It immediately comes into their margins. And therefore, from a profitability perspective, with demand remaining intact and margins actually expanding, cement companies should do better, even if it's a weak quarter when monsoons begin.
Okay, so a general positive take coming in on the entire cement basket. Meantime, just checking in on stocks that are lighting up the screen when it comes to the Nifty 500. Some of the smart movers, Graphite India and HEG clearly hogging the top spot. JK Lakshmi Cement, as we flagged off, not too far behind. There's also something like an IIFL Finance. Hindalco looks smart. Venky's India, as well as NCC, PFC, and GSK Pharma are a buzz. On the flip side, Dilip Bilkon loses steam. Something like Adani Total Gas is in the red today, as well as a Gujarat Gas. Team Lease and Rights, those are some of the other stocks that are down and out. Nuresh, let's get in your take then on some of the interesting buzzers in today's trade. What's your outlook on the likes of a PFC and a Hindalco?
So both interesting stocks. PFC has given a fresh breakout. The momentum continues. It's just that the risk reward is a problem in this name because the stock has already moved up quite a bit in the last few sessions. But Motocorp looks interesting. That's a fresh flag breakout here. Also, this was the high made in April of last year. So a fresh breakout about 290 gives us an upside of 330, 350 in the short term. So looking at Motocorp compared to PFC.
That's the take coming in. In fact, let's shift focus back to what's happening with respect to the commentary coming in from the big political leaders at India Economic Conclave. We saw a slew of ministers come by talking about their outlook for the different sectors. You had Defense Minister Rajnath also talking about how we are looking at indigenization, etc. Let's listen into some of those comments because Jyotiraditya Scindia also talked about what's happening with Go Air and the impact it could have on the aviation sector.
हमने सेनाओं की ओर से 411 आइटम्स की एवं डिफेंस पब्लिक सेक्टर अंडरटेकिंग्स की 4,666 आइटम्स की पॉजिटिव इंडिजिनाइजेशन लिस्ट जारी की है और इसमें शामिल लाइन रिप्लेसमेंट यूनिट्स, हथियार, गोले, बारूद, मिसाइल और अन्य प्रकार के रक्षा से संबंधित साजो सामान हैं जिनका निर्माण अब केवल और केवल हमारे ही देश में होगा. हम किसी भी सूरत में दुनिया के दूसरे देशों से हम इंपोर्ट नहीं करते.
If you look at airports, when I talk about the fact that we're going to grow from 148 to almost 200, 220 airports over the next 4 to 5 years, we have close to a 98,000 crore capex plan in place for the next 3 to 4 years. We have looked at that document, we've identified the loopholes, what needs to be worked at by them, and we are waiting for a revert from them. But I certainly hope they're up in the air as soon as possible.
ये हमारे देश की सबसे बड़ी इंडस्ट्री है ऑटोमोबाइल इंडस्ट्री. ये टोटल साइज है इंडस्ट्री का 7,50,000 करोड़. इसमें से 3 लाख करोड़ का हमारा एक्सपोर्ट है और अभी हमने ये तय किया है कि 5 साल के अंदर हम इसको 15 लाख करोड़ का करेंगे. ये जो इंडस्ट्री है इसने देश में 4.5 करोड़ जॉब क्रिएट किए अभी तक और देश में राज्य सरकार और भारत सरकार को सबसे ज्यादा जीएसटी दिया है. अभी हम वर्ल्ड में 4थे नंबर पे थे पर अभी कुछ दिन पहले हमने जापान को पीछे डालकर हम 3rd नंबर पर आए.
So Hantesh, you must have heard the union ministers talking about, and they talked about 4 sectors, particularly defense. It was about airport infrastructure. It was also about roads as well as the automobile sector. If you had to take a top bet from all of these sectors, what would that sector be?
Obviously, it would be the defense sector right now because the overall penetration of the defense industry is pretty low. And from a stock market perspective, there are exciting new companies that have just hit the market in the past few years, particularly from the government side. So defense would be will be the long haul when it comes to investing. But then, interestingly, automobile, after having faced a decade-long pressure in terms of overall volumes, is starting to find its feet back again and the mojo back again. And they are able to now start growing quite well. There are exciting new models, be it on the passenger side, even on the commercial vehicle side. There are a lot of solutions that are now being offered by the CV makers. So overall, the automobile sector has started doing well. Although I didn't understand under what context Mr. Gadkari talked about exports growing almost half. He quoted a number which was 50% of the overall industry side. But that apart, exports is actually a bit lackluster, I would say, from the earlier times for automobile industry. But then, so what I'm trying to tell you is these industries, the defense as well as the automobile industry, are like the core manufacturing industries, which typically have a multiplier effect in terms of the overall ecosystem of the industries. They generate substantial demand into various other subsectors, right from chemicals to even oil and gas. So I would say that these two industries should be in focus, and particularly defense will be the long haul.
Take on something that's buzzing away in today's trading session. What's the outlook on Zomato on the charts? Kunal, that's for you. Zomato.
Okay. I missed that. So Zomato, I think after today's move, it just reinstates the fact that the stock has been into a very sweet uptrend for itself. From 55, I think the recent rally started off for Zomato. I think today's high is around 71, 72. The stock has ebbed off from the day's high, but then the setup is very, very positive for Zomato. So I would probably expect that maybe for the next couple of days, the stock may go into a bit of a sideways range because after today's up move, the stock has not closed at the highest point of the day. Had that been the case, then I think we could probably have been looking at a much stronger momentum for Zomato. But again, I think this could actually be a good opportunity for someone who has missed out on the stock price. So I think at 70 levels or maybe 68 could be a very good zone to buy Zomato. View remains bullish on stock, and because of the intraday correction which has happened today for Zomato, I think that could be another opportunity for traders who wanted to buy the stock at maybe lower levels.
To buy at lower levels, but look at the index level itself. It's been a roller coaster ride. There have been very, very jagged edges throughout the trading session today, and ditto for Bank Nifty. It was doing quite well earlier, but suddenly there is a bit of a choppiness as far as Bank Nifty is concerned as well, and it slipped a bit. Now just up around 0.25% as far as Nifty Bank is concerned. What's seeing pressure is ICICI Bank and Bandhan Bank. So those are the counters which are trading in the red, because rest of the banking names are actually holding comfortably in the green. But talking about the coming week, there are a whole host of cues lined up. Of course, top of the mind is the fact that there is RBI Monetary Policy Committee meeting in the coming week, and that will decide whether the pause is going to be a pivot or it was just a pause. Of course, we will get the US unemployment data also later tonight, so a bit of a trend coming in there with respect to how the Fed members would likely to decide in the coming week as well, which is June 13, June 12 is the meeting as far as Fed is concerned. Commodity will also be in focus. OPEC Plus meeting lined up over the weekend, so we'll watch out for the commentary from that. And then, of course, the monsoon onset was expected to happen on June 4th when it comes to Kerala. So whether that is happening or not is something to watch out for. Tata Group of stocks will be in focus. Tata Communication as well as Tata Motors has important analyst days lined up, so we'll watch out for more commentary coming in from that one. Mantesh, should track the financial space very closely, and I know you hinted about it earlier. What's your own assessment of whether it's going to be a pause this time around from the RBI, and what does it mean for the future trajectory of the rate sensitives?
So I definitely believe that there will be a pause, and this is going to be more or less a permanent pause from the RBI for considerable future ahead. Simply because the inflation has been well tamed. I wouldn't say that the headline inflation numbers have fallen to comfortable level, but they have been tamed. We also are seeing that the global cues suggest that the overall commodity prices are trending lower, demand environment is better. Most of the corporates are doing well for themselves, and the overall activity in terms of capacity utilization is better. If that is the case, you will generally find that inflation will try to remain slightly stagnant. But now from here in onwards, I think the markets will start ignoring what RBI will try to do. Because the major chunk of activity that RBI undertook for the last 1 year or so, between actually last March to this March, we had a big rise in the policy rates coming from RBI. That phase is now over. The market will now focus on other items and not on the RBI and RBI related activity too much from here onwards.
Okay, so that's the take coming in as far as RBI is concerned, expecting a pause and a permanent pause as that, at that is what Mahantesh is saying. But let's get the BTST ideas also out of the way. Kunal, you go first. What's the buy today, sell tomorrow idea? And tomorrow means Monday because we're heading into the weekend.
Absolutely, Anisha. So, two buy calls. The first one is actually a buy on Sun Pharma, something which we discussed in the morning. Looks extremely attractive on the charts. The stock has come back to that 1,000 mark after quite some time. So we said it's the buy 1,025 as a target. Stop loss. I earlier kept it at 975. Maybe traders could look at a trailing stop loss of 980. The second is a buy on Graphite. Now, after such a kind of a strong up move, one thing seems to be certain that the stock is now trying to come back into a very strong momentum uptrend. And these are the kind of stocks which generally go into high beta up moves over the very near term. So buy on Graphite, 415 as a target, stop loss at 350.
Okay, there you have it. That's Kunal's BTST trade. What about you, Naresh?
So first would be a buy on L&T. The stock has been consolidating well today. It is nearing an extreme short-term breakout. Stop loss at 22.10 and a target price of 22.80. Second is a buy on Motocorp, a clean breakout now into a multi-month high. Stop loss at 28.65 and a target price of 29.60.
We're also wrapping up the week, and remember in the week gone by, Nifty managed to hit a 5-month high. Of course, net it's been flat for the week. We did not see a major move on a 5-day basis, but nonetheless, at least we managed to scale that 18,634 level on the upside. It's Nifty FMCG and Auto which continue to be at record high levels, and Nifty Realty has also managed to scale a fresh 52-week high for itself. In fact, it's the top sectoral gainer this week with a gain of almost 4%. So Mahantesh, let's discuss the realty space a bit more. The likes of Sobha, Mahindra Lifespace, they saw a massive up move in the week gone by. Which are the top stocks that you would recommend from the real estate pack?
I think when you evaluate the real estate, you have to look at the different business models, because most of the real estate companies are either asset heavy and therefore indebted. There are very few companies which are asset light. Probably Godrej is one of them. Oberoi is another one which is a debt free kind of company. So one has to be very careful when you pick real estate companies, because debt levels can be pretty punishing for their financials, their ability to deliver profits, and therefore punishing on the valuations as well. Therefore, I would look at these kind of asset-light business models within real estate, or the ones which have some element of even REIT kind of structures made available, and so on and so forth. So try to remain focused on only those companies which typically do not consume large amounts of debt.
Look at the markets this week, and although it's been a very slim gain for the frontline indices, actually very negligible. It's a small cap index that's gained about 3.2%. Some of the prominent movers this week as well include an Apollo Hospitals that's gained about 8%. Hero Motocorp as well has done very well in the last 1 week, a nice 5% up move. Add to that, you've had an M&M within the auto space as well that has managed to gain. Titan has been an outperformer, and you've got something like an Asian Paints too that has had a decent week. On the flip side, though, ONGC, today it's a big drag and it continues. It's for the week gone by as well, has lost out about 6%. Ditto with Coal India and Reliance Industries. We've continued to talk about that underperformance, stark underperformance at the time when the markets are looking fairly okay. Mahantesh, let's get in your take. What's the outlook on Reliance Industries? The fact that that heavyweight hasn't quite played catch up when as compared to at least the frontliners.
Now, Reliance is a very big stock. In fact, Reliance is also a very large component as far as the market's capitalization is concerned. But then the overall outlook for Reliance appears to be quite positive. They have been doing steadily better over the years. They have tackled their debt issues. They have seen to it that their telecom business has become a big money spinner for them. The retail has also joined into the party when it comes to useful profit contribution, and the oil and gas sector has transformed itself from purely a refining kind of company to a well-diversified asset pool, also on the petrochemical side. So having said that, the outlook for Reliance does appear to be positive. This is a company which is directly linked to the economic activity, directly linked to the economic prospects of the country. And I believe that as the country has started recovering post the COVID lull, a company like Reliance, which has an overbearing presence on the economic activities of the country, should do generally better. I once again would say that they have done better for themselves. The only thing that now is missing is that we don't see any major trigger points coming in. We used to have triggers in the past, such as new investments that they attracted to make their on the geo platforms, for example. They had triggers related to certain asset sales. We haven't seen any M&A activity to a large extent from Reliance as yet. So missing are the triggers for any stock growth. Disclaimer here, I own the stock.
So the outlook remains positive for Reliance Industries. But let's take a quick one-word answer from Kunal and Naresh. Kunal, is fresh life high coming in on the Nifty in the coming week? Yes or no?
Is it only coming week, or can we extend it to another 15 days?
The next one.
Okay, I think I'll go for a yes.
Okay. Naresh, what about you? What do you think?
Not expecting it next week.
Okay, so a bit of a divergent house there. But anyways, we're wrapping up the week in the Friday mode already.